QRMP Scheme and Changes in GST with effect from 1st January to 2021. He has qualified chartered accountant in year 2010. Just one second, no, sir. Sorry. Uh, he has qualified chartered accountant in year 2010 and has been practicing in Raipur since then in the field of indirect tax. During his CA student life, he has been awarded for highest marks in direct taxation in CA final and highest marks in taxation in CS executive. He is empaneled faculty of Indirect Tax Committee of ICI, New Delhi for GST. He is also visiting faculty of National Academy of Customs, Indirect Tax and Narcotics, Raipur for training of CGST department. He has spoken in more than 200 forums on GST training, seminar, workshop across India for various trade bodies, professionals and corporates. He has written various articles which are published in journals, books, newspapers and reputed websites like Taxman, Tax India Management, etc. He has authored an article on GST on exports of goods and service, which has viewership of more than 1 lakh. He has been invited by Doordarshan MP CG for panel discussion on GST. He is felicitated by the Chhattisgarh Sales Tax Bar Association for the work and contribution towards society and member in the field of GST. He is also felicitated by Chamber of Tax Consultants, Mumbai, for acting as GST group leader. He is founder of a LLP working in the field of GST for training, IT-enabled services, compliance, litigation, etc. in name and style of Mrs. GST and Global Solution LLP. Apart from academic, he is active with social group called JCI and has been founder president of one of the chapters. And he is a regular blood donor and has donated blood 23 times till now. He is very active in various sports, including cycling, running, and has completed 3 half marathon titles. With this brief introduction, I request Bhattacharya sir to start with the session.
Thank you for a very wonderful introduction. I would like to now start my screen sharing.
Yeah, I'm eating my pastry. Didi, I'm eating my pastry. You want yours? I'm eating mine.
Yeah. Can the host confirm me that my screen is visible properly and my voice is audible?
Yes, it is visible. Yeah, perfect. Yeah, you're audible. Yeah, and the screen is visible.
Thank you, sir. Thank you. Thank you, sir. So, respected seniors, dear friends and colleagues, I have been given these 2 topics to cover for today. One is the quarterly return monthly payment scheme, and the other one is recent changes in the GST. I'll be first touching upon the quarterly returns, and then we'll see some recent changes in the GST, which are majorly effective from the 1st of January 2021. Return filing is one of those things which is very important in any tax structure. It is a way by which the taxpayers and the government interchange data between each other. And there's been practice going on wherein in past regimes, if we see, the taxpayers were very habitual of filing just few returns, 2 returns in a year in service tax. In case of VAT, quarterly return filing, and especially the MSMEs were very much troubled by the number of returns which they are required to file in the GST regime. In the starting, if you can recall, we were told to file 3 returns, that is GSTR 1, 2, 3, and an annual return at least for a year. And it was mandatory for all of the assessees. So it was total 37 returns which were required to be filed at the initial time when the GST was introduced. But later the government realized that the GSTR 2 system has not came, GSTR 3 was not ready. So the current prevailing system was that all of us was required now GSTR 3B, that is the main return which is filed on 20th or 22nd and 24th every month, and it is required to be filed by every person. And there is GSTR 1 in which the outward supply details are given, and for this there are two different classification. Registered taxable person who is having turnover of more than 1.5 crore, they are compulsorily required to give the details on 11th of the succeeding month. And those registered taxable person who are having turnover of less than 1.5 cr, they can give this detail on quarterly basis. So still the facilities are like you have to file GSTR 3B monthly, but you have some options. If you are having turnover of less than 1.5 cr, you can opt for GSTR 1. But anyhow, the exercise need to be done monthly because the GSTR 3B has to be filed on monthly basis. And again, there was a lot of pressure coming from small and medium sized enterprises, especially the trades, and they were saying that because we are not so habitual, not so we cannot maintain punctually so much of data. So there was always a demand that for those small taxpayers, the return filing has to be quarterly. And seeing this, the government has made amendment to Section 39. There was no provision in Section 39 in the GST Act which would enable the quarterly filing. So the government amended GST Act Section 39 Wide Finance Act 2019. The government added a provision to Section 39 which permitted government or department that they can allow some class of person, registered person, to file return quarterly subject to the condition restriction as we prescribed. If you go through Section 39, the subsection 1, you will find there is no option of quarterly filing. Later, by the amendment in the Finance Act, they added a proviso by the virtue of which now, at least taking power from this proviso, the government has created the facility at least to file quarterly returns. But please mark carefully, this amendment was done in Finance Act 2019, and this has been notified recently by notification number 81 dated 10/11/2020. So this amendment was done at the time of Finance Act, but it was not notified. And at the time of making this amendment, government has some different plans of making quarterly returns. They also amended another provision called 39(7), Section 39, subsection 7, wherein they also added one proviso which permitted, because since there was no power to the government that they can allow monthly payment of tax also. So they added one proviso, and they mentioned is that if the person will file quarterly return, that the government and the department can decide that how this person will pay tax. But it should be marked very carefully, though the facility of filing return is created quarterly, and in subsection 7, the proviso which is added still says that the payment has to be done monthly. So you can mark this bold, during the month, in such form and in such manner and within such time as may be prescribed. So they have made amendment in Section 39. They added one provision in subsection 1 just to create a power that they can allow some people to file return on quarterly basis. They added one provision to subsection 7, and to mention that there will be a scheme decided or a method decided in which, though they will file the return quarterly, but they will pay the tax monthly, and they will decide how they will pay, the manner, the time. They can decide by this section. Again, this amendment is also notified recently by the notification number 81 and made effective from 1st of Jan 2021 with this scheme. And when this amendment was brought by way of Finance Act 2019, let me tell you, the department were thinking to bring a different system, which was to bring a new type of return. And I hope you may recall that there were discussions started in between, that there will be RET1, RET2, RET3. There will be written form called Sehaj, Sugam, and there will be monthly filing for those persons who will be filing, who having turnover of 5 crore, and those people who are having turnover of less than crore. So this was planned while at the time they were amending the section. But later on, now they have shifted to something else. We'll see one by one everything. They decided, at the time of amendment, they decided that we will have quarterly filings for less than 5 crore turnover, and the return will be RET1, RET2, RET3. And they said for those people who will be having turnover of more than 5 crore, we'll having monthly RET1 option. And the old system was prevailing, which was very safe. And you can recall again at that time, the new GST schema was there will be annexure 1, annexure 2. Annexure 1 will be outward supply. On the basis of outward supply, the annexure 2 will auto-populate, and based on this annexure 1 and annexure 2 data will get auto-populate in RET 1, 2, and 3. So there will be no mismatches in the outward supplies or inward supplies. By this way, they were planning to bring this new system. But I don't know, in this system was about to come from 1st of April 2021. But then suddenly this pandemic happened, and government thought, yeah, again after 3 years of GST, people have now started realizing that what is GSTR 3, 3B, GSTR 2A, GSTR 1. Will it be good that if we change suddenly the whole system of GST return filing to bring RET1, RET2, Sahaj, Sugam, Annexure 1, Annexure 2? They scrapped everything, and they tried to implemented the same function which they have planned in Annexure 1, Annexure 2 in the current prevailing system of GSTR 1 and GSTR 3B. How? I will tell you. And for Annexure 1, see, the primary purpose, the primary concern was, let's see that all things has to be auto-populated. From Annexure 1, outward supply need to be auto-populated to RET1. So now what they have done is, they have created this system in GSTR 1 itself. All your outward supplies will be filed first, and that outward supply will get auto-populated in your GSTR 3B. They were saying that Annexure 2 from Annexure 1, Annexure 2 will come, which will be your inward supply. So now what they have done is they have brought GSTR 2B, which will get created at midnight on 13th of every month. And this GSTR 2B will carry ITC return, and that will get auto-populated in GSTR 3B. And by this, your GSTR 3B will automatically have outward supply and your inward supplies on which ITC will be available. And there will be very, very lesser chances of making mistakes. So this was envisaged earlier in Annexure 1, Annexure 2 form in RET1 and RET3. But later they scrapped everything. I can recall I have taken so many trainings on this Annexure 1, Annexure 2, Sahaj, Sugam for the taxpayers also, for the department also, for the consultant also. But later all things get waned, and now we are carrying on with the same system. But with every functions which were earlier planned in Annexure 1, Annexure 2 was brought in the current prevailing system of GSTR 1 and GSTR 3. So this they have done, but there was one important concern, that still there was no feature of there was no thing called quarterly return for the SACs those who are having turnover of less than 5 crore up to 5 crore, and for those who are having for monthly return for those who are having 5 crore. So for them, they brought a new scheme called quarterly return monthly payment scheme. Let me just once give you a comparison how this in a snapshot. Let me share you that how this scheme will work, and how the basic comparison between the existing return filing system and the proposed QRMP scheme. The current scheme is where we have monthly filing of GSTR 3B for all the taxpayers, and in the proposed quarterly return monthly payment scheme, we will be having quarterly return filing of GSTR 1 and GSTR 3B for the taxpayer who are having aggregate turnover of up to 5 crores. In the current scheme, we were having a facility of GSTR 1 filing quarterly for those assessees who were having turnover of less than 1.5 crore. And in QRMS scheme, we will be having GSTR 3B and GSTR 1 mandatory monthly filing for all the taxpayers who are having aggregate turnover of more than 5 crore. Then there was 3B monthly, GSTR 1 either quarterly, monthly. Now in the proposed QRMS scheme, GSTR 1 and GSTR 3B both will be either has to be a quarterly or monthly based on the turnover basis. Let us see this scheme in very detail in each and every aspect, very carefully and very minutely. Let us first see the eligibility. Who can opt for this scheme and who cannot opt for this scheme? The first eligibility is your aggregate turnover has to be up to 5 crore of rupees in the preceding financial year. Now, when we speak about aggregate turnover, now that we are very familiar with this terminology of aggregate turnover, this includes all types of turnover, your taxable, your exempt, your non-GST, your non-leviable, pan-India basis, everything is covered. If your turnover is up to 5 crore in the preceding financial year, you are eligible to opt for this scheme. What will happen if a person is having a turnover of 5 crore up to preceding financial year, but in the current year it exceeds? It says that you have to compulsorily, you will become ineligible when it crosses the 5 crore during a quarter or during a year. And for those people, they have to compulsorily opt out of the quarterly filing scheme from the first month of succeeding quarter. That means in between, if it exceeds, then the quarterly facility will continue for at least for that quarter, and from the next quarter they have to compulsorily opt for the monthly scheme. Even though this facility is for those assessees up to 5 crore, but this scheme is purely optional. There is no mandatory. If you want, you can opt for it. If you like, you can opt for it. There is no compulsion in opting this scheme. This scheme is effective from all the quarters after January 2021 onwards. In this scheme, you are required to pay the tax every month in accordance with the provisions of subsection 7 of section 39. Though the return filing is quarterly, but payment has to be done on monthly basis. We'll see carefully how the payment will be made, what are the options available to this in this. Let's say how the options will be exercised, what are the how the options will be exercised, and when I can opt for, when I can opt out. The very first important condition which is there in while opting this scheme is the return up to the preceding month has to be filed. If I am opting for this scheme, quarterly return monthly payment scheme, my preceding month return has to be filed as on the date of exercising of such option. Let's say, for example, if I have to opt for January to March scheme, then it is very important that my December return has to be filed as on the date of opting this option. When can I opt for this scheme? It gives a long time period to opt for this scheme. It says you can opt for this scheme first day of the second month of the preceding quarter till the last day of the first month of the quarter for which option is being exercised. I know it is being confusing. Let's see with this example. A person after filing January 2021 return wish to opt for the scheme for April to June. What option he can have is, he wants to opt for April to June. So he can opt at any point of time in the preceding quarter second month. So our preceding quarter second month is 1st of February 2021, and up to when he can opt is the current quarter's first month last date. So we are opting for April to June. So April month last date is 30th April 21. So we can opt for this scheme anytime, first day of the second month of the preceding quarter till the last day of the first month of the quarter for which the option is being exercised. So if we are opting for April to June, we can opt anytime after 1st February 2021 and in between 30th April 2021. Continuity, like every scheme, we can see in some of the schemes, like in section 10 in composition, we have to exercise this option every year. But in this case, once if we opt this scheme, it will remain continue, and it will we don't need to exercise this option every year. If you want to opt out, you have to specifically opt out. Otherwise, this scheme will continue unless you are eligible. Your turnover is within the limit. When can we opt out of this scheme? Let's say after exercising this option of quarterly return and monthly payment, if we find that this scheme is not working for us, this scheme is not beneficial for us, we are facing some challenges, then can we opt out in between from this scheme? Yes, this facility is very much available. You can voluntarily opt out anytime after this. But only thing is, when you exercise this option, you will be opted out after the completion of a quarter. You cannot opt out in between. You can very well opt out monthly payment, monthly return filing scheme from the next quarter. Now, what will happen if my turnover exceeds 5 crore? I told you earlier, you have to mandatorily opt out of. You will be mandatorily opt out of this scheme, and you will be from the next quarter. You have to compulsorily file the monthly filing of GSTR1 and GSTR3B. Then, if we see, there is one default option which has been created by the GSTN. That is, they have issued a GSTN. GSTN has issued a press release in which they have stated, based on the tax period October 20, those taxpayers who have filed October 20 return, that is before 30th November, GSTN has exercised an option on their behalf. So by default, the GSTN has changed the option on their behalf. And if you want to change the default option, then the change option can be exercised in between 5/12, that is 5/5 of December to 31st of January 21. So let me tell you, tomorrow is the last date if you want to change the default option exercised by the GSTN. Now let me tell you on what basis, on what ground the default option is exercised by the GSTN. Number one, they have categorized this into three parts. Let me tell you each and every part in detail. If a registered person is having an aggregate turnover of up to 1.5 crore and who is furnishing GSTR1 on quarterly basis, that is, he is having a turnover up to 1.5 crore and he is paying GST, he is filing GSTR1 on quarterly basis, then the deemed option which GSTN portal has exercised is quarterly basis. Next category is, if you are having turnover up to 1.5 crore, but you are filing GSTR1 on monthly basis itself, then your deemed and default option is monthly return. And third category is, if your aggregate turnover is more than 1.5 crore, but up to 5 crore in the preceding financial year, then the default option chosen by the GSTN is quarterly return. See friends, most of our client where we need to change the default option is category number 3. In in this category, most of our client may fall who are of small and medium size, who don't wish to go for this quarterly scheme. So we need to go to this tab and change the option to the monthly return. And tomorrow is the last date for all those people who have not changed this option, right? So we have to be very careful and change if we want to opt out of this monthly return. And tomorrow is the last date for this January to March quarter. And if we see, if we revise it once again, so those people who are having turnover of 1.5 crore, if they are filing on quarterly basis, then they are given, their default option is quarterly. If they are filing on monthly basis, their default option is monthly. And for all those person who are having turnover of more than 1.5 crore and turnover up to 5 crores in the preceding financial year, for them the GSTN has by default selected quarterly returns. And if they don't wish to go for quarterly return, you need to go to the GSTN portal and rectify and select the monthly format. How it will be done? Let's see where it will be done. It will be done through this option. You have to go to the GSTN portal. You have to go to the returns, and there is an option called opt-in for quarterly returns. Again, this tab will come, and on this you will find this for this quarterly for Jan March. You have to change from this to monthly, and you have to press this button, and your default option will change to monthly from the quarterly. And let me once again remind you that this option can be rectified only up to 31st of January 21. So tomorrow is a last date, so in which you can revise this. If you have opted again monthly, and if you want to switch again back to quarterly, you can switch it very well. There is no problem in switching in between monthly and quarterly up to this 31st of Jan 2025. Now, what is one key point which the question may arise, that is this facility PAN wise or GSTN wise? We very well know that in GST regime we may have multiple GSTN in the same PAN, and in various sections and various provision we have seen that some facilities or some options need to be exercised the whole PAN wise. But this facility of quarterly return and monthly payment scheme, they have given us option that this scheme can be opted GSTN wise, not PAN wise. So if you are having multiple GSTN number based on your turnover, based on your transactions, B2B or B2C, or any other criteria you like, if you want, you can opt for one GSTN quarterly returns, and for other you can opt for monthly return. You have these options, and you can very well opt GSTN wise, not PAN wise, right? So we have discussed two things: eligibility, options, and now we'll be coming to important part, that is payment. Now in this payment, we already discussed that though return filing is quarterly, but payment has to be done on monthly basis. And for this, there are two types of facilities available currently in this scheme. One is estimated basis, another one is special procedure. We will see each of this facility in very much detail with examples so that it is very clear to all of us. The first scheme is on estimated basis. The estimated basis scheme is where you have to calculate your liability of payment based on the inward and outward supplies during a month, and you have to pay the actual tax. In the special procedure, which is specially notified by notification number 85, in this you have to pay the tax monthly based on your preceding tax period data. We'll see in detail also in this how this will work. In both this option, you have to pay this challan called GST payment 06 monthly for first 2 months on 25th day of the succeeding month. Let's say we were paying for January, so we have to pay this on for January month on 25th of February in PMT 06. For we are talking about those 2 months. For quarterly filing, first 2 month payment will be done by this procedure, either on estimated basis or special procedure. Let's see one by one what this payment scheme says. The first one is estimated basis. In estimated basis, you have to calculate what is your outward supply, and how much is your tax payable on the outward supplies. What is the amount of input tax credit available with you? What is your reverse charge liability? And how much is the credit available? How much is the cash available? And on basis of that, you need to make the payment in the first 2 months of the quarter. And the challan will be in the same PMT 06 up to 25th of. If there is any excess or shortfall, you can pay and adjust at the time of quarterly filing of GSTR 3B. But there is one very, very important point in this scheme and in this method of payment. That is, if there is a shortfall in the first 2 months of payment, then there will be an interest liability. There will be an interest liability. You need to pay interest from the date 25th and till the date of filing of GSTR 3B. You need to pay interest for both that first 2 months, right? So in this method, you need to calculate your liability on estimated basis. If there is a shortfall, you need to pay interest. If there is excess, you can adjust in the coming month, in the coming quarters, or you can take refund after the filing of GSTR 3B of quarter. So this is very simple scheme. It says that you need to calculate everything on the estimated basis and discharge the tax, just as we do in monthly GSTR 3B filing. That's it. You need to roughly calculate it and discharge your tax liability. This is very simple. The another very interesting thing is, let's see first the example of this scheme and then we'll move ahead. The example of this first estimated basis is, in the first month, you are having an outward supply tax of 1,000 rupees. You are having tax on inward supply RCM of rupees 50. The available input tax credit is 800. So you have to make net payment in PMT 06 for the PMT 06 up to 21st, that is 250 rupees. In the second month, you are having liability of 1200, RCM liability of 150. Your available ITC is 1300. Though your ITC available is exceeding the outward tax, but still RCM liability needs to be discharged in cash. So we have discharged 150 rupees in the PMT 06 challan. For the third month, outward liabilities of 1500. The inward supplies RCM is of 200. Input tax credit available is 800. We have opening balance of 100 left of past month. So our liability is again 8800. So if you see that, the total tax discharge is 1200. And this is again, if you see for the whole quarter, this is 1200. Let's say in the first month, instead of discharging 250, we have discharged 200. And in the second month, we have discharged 100. And all this 100 is added in this quarter in third month. Then for this first month and second month, we have to pay interest up to the date of filing of GSTR 3B. Right? So this method, this payment method says that you need to discharge interest for the first month and second month if there is a shortfall. Then we come to the second method, which is special procedure, which is very interesting. Let's see what this special procedure says. And it is on the basis of some preceding tax period data. Let's say you are filing the quarterly return for January to March. Then you have to discharge your tax liability based on the previous tax period, that is on December or previous quarter. Let's see how it will work. If you have filed the preceding quarter return, if you have filed a return for the preceding quarter quarterly, then you have to pay 35% of the tax liability paid by debiting the electronic cash ledger in the preceding quarter return. That means if you have filed the previous return on quarterly basis, then whatever your quarterly cash liability was there, you have to pay 35% of that quarter's cash liability in the first month, 35% in the second month, and the remaining left to be paid in the last final month, third month. How it will work? Let's see by an example. Let's see this month, the transaction for January to March. The outward supply was 3,700. There is inward supply of 400. Tax on inward supply is 400. Input tax credit available is 2,900. In this, total cash ledger payment was 1,200. So from April to June onwards, I have an option to pay 35% of this quarter, that is 420 on 25th of the next month. So 420 will be paid here, 420 will be paid here, and whatever my liability left for this quarter, that is for April to June, I can discharge at the time of filing GSTR 3B, that is 560 rupees. That liability for this complete quarter was 1,400 based on the data available here, and I have paid 35% of the last quarter in the first month, 35% in the second month, and the remaining 560 at the time of filing GSTR 3B. So I have discharged all the 1,400 liability at the time of my quarterly return. Then your liability is completely discharged, and there will be no interest in this. If there is any shortfall at all in the first and the second quarter, if you have paid 35% of the tax of the previous month quarter, then there is no requirement of payment of any interest, even if there is any shortfall. The whole shortfall can be paid in the third month itself. But there are situations when it says that the previous return filed is only a monthly return. Then it says you have to pay the 100% of the tax liability, 100% of the tax liability paid by electronic cash ledger. Like most of the people who are opting for January to March quarter, they will be going by this method only. And for them, because in the January month, we will not be having any of the return filed on the quarterly basis. We will be having only December month data. And based on the December month data, we will be paying our challan for the Jan and Feb month. So it says in this method, it says you have to pay the 100% of the tax liability which is paid from the cash ledger. How it will work? Let's see by an example. In the December month, I have paid the outward tax of 1,000 rupees, RCM 50 rupees. I was having a credit of 800, so I have made a cash ledger payment of 250 in the December month. and now for January to March, I don't have I have not filed still any of the quarterly returns. So it says 100% of the preceding month has to be paid for the first 2 months. So 250 will be paid in the first month in this for the January month payment, and that has to be made up to the 25th February. Again, 100% of the December month have to be paid for the February month up to 25th of March. And for the remaining payment, for the remaining liability, I can pay at the time of quarterly filing of GSTR 3B, that is rupees 700 at the time of filing of GSTR 3B of March quarter, January to March quarter. So after filing this January-March, I will have one return at least filed quarterly. So from April to June quarter, I can again switch to this 35% of the cash liability of the quarter. So in this way, this liabilities can be discharged. There are two methods in which, in the very first method, you have to calculate actual liability based on your outward supply, based on your current month outward supplies, current month RCM, current month input tax available, and discharge the tax. In the second method, you have an option that based on your previous tax period, that can be monthly or that can be quarterly. If you have previous month data of quarterly filing, then you can have to pay 100% for the first 2 months. But if you have history of quarterly filing with you, then you can pay for the first 2 months 35% of the tax, like we have seen in this illustration. In both this method, for any of this excess or short payment of previous 2 months can be adjusted in the GSTR 3B for the quarter. And one very good and important point is there is no interest liability if there is any shortfall. If you have made the payment of 35% or 100% by whatever way, and even if the liability of that month is not fully discharged by way of payment of this 35% or 100%, there will be no interest liability in this method, which was there in the first estimated method. So this method in terms is very important when we see that we don't have the means to calculate the actual liability of that month. We can always opt for this method where we can pay the liability 100% of the previous month, or we can pay 35% of the previous quarter. Let's see some of the important points of this special procedure. It says that there will be no requirement of payment if there is enough cash ledger already available, there is enough credit ledger available, or there is no liability at all. Let's say for that particular month there is no transaction at all. Even though if you are opting for special procedure, do you need to pay 35% of the previous quarter liability? The answer is no. This option very well clearly says that you can evaluate that if you have enough cash balance, enough credit ledger that can discharge the liability, or you are having a very nil liability, then there is no need to make payment of 35% or 100%, whatever options we have. Then it says the registered person shall not be eligible for this said procedure unless he has furnished a complete tax period in the preceding such month. That what do you mean by complete tax period? A complete tax period is again defined in the notification itself. It says where a person is registered on the first day of the month and the last day of the month, last day of the tax period. Let's say, so when this situation can arise, when a person is not registered in complete tax period, let's say a person has got registration on 8th of a month, then he will be he is not registered from the first and the last day of the tax period. Then this special procedure facility is not available, at least for that period, for that time. So he need to compulsorily go to that estimated one where he has to calculate on the actual basis the outward liability, the input tax credit available, the RCM, and he has to discharge this. So special procedure will not be available for that person who has recently taken registration and he has not paid tax for complete tax period. Once he has paid for complete tax period, he can very well opt for this special procedure from the next month onwards or from the next quarter itself. Let's see some of the FAQs and clarifications with this payment part. Payment made by GST PMT 06 challan will remain in the cash ledger or will be settled off? No, this payment, see, we are very habitual in GST. The loading of cash is one thing till now we have believed that loading of cash is never a discharge of tax liability. We have to compulsorily get it settled off from the liability register, or by way of filing GSTR 3B return, or by way of filing DRC 07 challan. But in this scheme, it is saying that even if you load this in the cash ledger, the amount will remain in the cash ledger and it will be treated as a valid payment. The same will be settled off at the time of GSTR 3B of filing of entire quarter. But one very good thing is that this payment is done from GST Pay PMT 06 challan, which is a special challan. That means payment made through this challan cannot be used for any purpose. You cannot use this challan for any of the DRC payment or anything else. So it will remain intact. It will remain in the cash ledger itself, but it will get settled off from the GSTR 3B, and it will be considered that you have validly discharged your monthly obligations of payment of tax, and there will be no interest. Like in the normal filing, in the normal monthly filing, even if we load appropriate cash in the our cash ledger, that is not considered as a properly discharge of our liability until it is settled off. But for quarterly payment, let me once again repeat it. If you load the cash in the cash ledger by way of GST payment 06 challan, it will be very validly considered as a payment of challan, and this will get settled off at the time of filing of GST 3B for the entire quarter. What is the due date of making payment in the cash ledger for the first 2 months? That is 25th of the next month. For January, 25th of February. For February, 25th of March will be the due date. Is there any late fee if I have not paid on 25th of the next month? No, there is no late fees applicable if I will not make the payment on 25th. However, there will be interest liability. You need to discharge interest for the late payment. You need to pay interest up to the delay you have done in the filing. If you have made excess payment in the first 2 months, then what will happen is, if you have made any excess payment, you can claim refund of this only after filing GSTR 3B of the quarter. Let's say if you have wrongly deposited cash in PMT 06 challan, and you have enough cash, enough credit available in the credit ledger, you can very well claim the refund of the same. But only condition is that you need to first discharge GSTR 3B of that quarter. Then only you can claim the refund of this excess paid challan. Then we come to a very interesting point, that is IFF, that is invoice furnishing facility. We are very much aware that nowadays that credit is available only once it is reflected in GSTR 2B, or earlier it was 2A, now it is 2B. Now, if one files return quarterly, how will the recipient will get credit if he or she will furnish return quarterly? So that means their credit can get stuck for 2 months if he is filing return quarterly. For making this scheme interesting and for creating viability and for compliance of Rule 36 also, the reflection of credit in GSTR 2 and 2B, there is another interesting facility created for this quarterly filers, that is inserted by way of Rule 59.2, which says that for all those quarterly filers who are filing their return quarterly, they can furnish their outward supplies detail for the first 2 months up to a value of 50 lakh rupees each month by using invoice furnishing facility electronically from the first day of the month till 13 of the succeeding month. So if I have to furnish January month B2B invoices, if I have opted for quarterly return, then I can use IFF facility, and up to 13th Feb, I can use the IFF facilities and I can upload B2B invoices by way of IFF, and the same will get reflected to my receivers in their GSTR 2B, and they can very well claim the ITC under Rule 36.4. So this facility, this problem was again earlier also there. Those entities, those taxpayers who have opted for quarterly GSTR 1, their buyers were facing very big challenges of taking credit. They have to convince the taxpayers, tax departments, and their huge credit were also blocked. to make this scheme viable and good, this facility is created that now even if you pay, even if you're making you're filing return quarterly, the GSTR 1 and GSTR 3B, but still you have the facility of uploading the invoice every month. If you have B2B transactions, or if you have debit note, credit notes up to a value of 50 lakh each month, you can upload the invoices and you can pass on the credit by way of by way of compliance to Rule 36(4) and GSTR 2A 2B. It will get reflected and the receiver will get the credit of the same. If you see the tab, if you have opted for quarterly scheme, then in that you will see a facility here called invoice furnishing. You will not see GSTR1 here. Instead, you will see invoice furnishing facility here. So there, if you have selected the quarterly scheme, then for the month of January and February, you will not find GSTR1 option here. Instead, you will find invoice furnishing facility here. And from this option, which is very similar to the GSTR1, you will prepare a JSON, you will upload it, and the same way you file GSTR1, you have to furnish your invoice in this IFF facility, and it will get reflected in GSTR 2A and 2B again. This is a screenshot. Again, the same way, this 4 tabs will appear in IFF also. This B2B invoices, credit note, debit note, and if there is any amendment need to be done on this B2B, on credit note, the debit note, the same way it can be done in amended B2B, and amendment to credit note and debit note, again it can be done by way of this IFF facility. Let's see some another interesting point about this IFF facility is this IFF facility. If we furnish some of the invoices and debit notes in IFF for the first 2 months, do I have to furnish it again in GSTR1? The answer is no. If you furnish for the first 2 months of the quarter, then this will get auto populated in GSTR1. You don't need to put again in the GSTR1 of the set quarter. Then Rule 59(5) says that you can furnish invoice-wise details of intrastate and intrastate supplies. Even you can upload debit note and credit note issued, done. You can amend this. There will be no duplicity in GSTR1 because it will be once uploaded, it will get reflected in GSTR1 automatically. But it should be noted very carefully that this IFF facility is only for B2B transactions. For all the B2C transactions, you need to properly give the details in the GSTR1 quarterly itself, right? And so there will be you have to compulsorily disclose for all the months transactions in the quarterly GSTR1. This IFF facility is not compulsorily; these are optional facilities, and one can exercise this option at his or her will only. So this is IFF facilities, and this is all about our quarterly return and monthly payment schemes. Next, I'm moving to my second part, which is the recent changes and updates in the GST. Let's see what are the recent changes and updates which has happened to the GST.
Yeah, just a minute. Yeah, Ramandeep, thanks. I just want to make a request to the members. Many members are still not renamed themselves with the membership number and name. So please do the same. Otherwise, CP credit won't be eligible. And another thing, yeah, any questions would like to take right now on QRMP? If any member
I can take, sir. If there is any question relating to scheme, I can very happily take, sir. Please.
Yeah. Any members? Any questions? Yeah. Yeah, so for CP credit, member's name should be the membership number followed by dash followed by the name. So Amtuzera, Mayank, Muskan, Sunita, Tahir, Anmol, Anup, Mandar, Mohammad, Sanket. Please rename yourself so we can process the CP. Yeah, there's one question. What will be the rate of interest for the first 2 months of QRMP scheme? That's why it's Tanvi course.
The same, sir. Section 51 rates will be applicable. That will be 18% only.
Okay, I think that's it for the questions. You can proceed, Ramandeep. Thanks.
Okay.
And we'll take other questions at the end.
Yeah. Okay. So let us see some of the recent changes which has happened in the GST recently. I'll be first taking up some of the important amendments which were done in the Finance Act 2020, but which were notified recently and which were made effective from the 1st of January 2021. I hope you all have gone through at the time of Finance Act itself, but still I will just touch upon it so that you are aware that these amendment have been notified and you can now use them very well in your practice. The first of the amendment was section 10, that was of composition scheme. It says there was amendment done in section 10 subsection 2 where the section 10 is for composition scheme, and in the composition scheme we see that the composition scheme facility is not available for some persons who are making interstate supplies of goods, for those persons who are dealing in supply of goods which are not leviable to tax, and those who are making supply of goods from electronic commerce portal. Earlier, there was a use of only goods words in this eligibility criteria. There was no words used of services. So by this amendment, the word or services is added to point number B, C, and D. So by this amendment, so now if a person is making any interstate supply, either of goods or services, that person will not be eligible to opt for composition scheme. Or if that person is making any supply of goods or service which are not leviable to tax under this act, till now there is no service I know which are not leviable to tax under this act, but they have brought in, they cannot opt for composition scheme. And then they say that there are those persons who are supplying goods, now service also, to an electronic commerce operator, they cannot opt for composition scheme. So this amendment is only for rationalizing those persons who are dealing in service also, in the interstate or the service also, they cannot opt for the composition scheme. Then we come to section 16, that is for input tax credit. Again, section 16(4) was amended, and there was one very important word which was struck off, which has a very much relevance. Let me explain you with an example first, and then I will see what is the impact of this amendment. If you all can recall, section 16(4) is a restriction, is a time limit up to which an input tax credit can be availed. For a normal invoice, if a invoice of 1920, then credit of this 1920 invoice can be obtained up to the due date of filing return of September 20. Right? September 20 is the last date for taking credit of invoice of 1920. What will happen if a debit note is issued? Let's say if a supply is done on 1920 and the actual value was of 100, but the person has raised invoice of 80 and he has forgotten to raise the invoice of 20. After 1 or 2 years, he realizes it's mistake, that I have to bill the transaction for 100, but I have billed only for 80 rupees. Let me tell you that there is no time limit for debit note. There is only a time limit for credit note to issue. For debit note, there is no time limit, because government gets tax from the debit note. So there is no time limit. But at the same time, the tax liability is reduced through credit notes. For that, there is a time limit. For debit note, there is no time limit. So a person realizes after 1.5 years that I have short billed a transaction and I have to raise a debit note of a certain amount. So that person has raised a debit note, that person has paid the tax. But interestingly, section 16(4) has linked the input tax credit of that debit note with the original date of the invoice itself. So that if you will see the linkage of invoice date, that period is already crossed, because it is only up to the September month of filing of return. So, which is very bad because the debit note is raised right now and it has to be seen from the debit note date rather from the invoice date itself. So this amendment is done in which the invoice relating to such word is struck down. So that means now for taking the credit for any of the debit note, you will need to see the date of debit note itself, not the date of original invoice itself. So now the credit can be availed based on the debit note date, not on the date of the invoice to which it originally pertains. So this amendment was done by the way of Finance Act 2020, which is now notified from the 1st of January 2021. Section 29, which is relating to cancellation or suspension. There was one anomaly in this section 29 that the proper officer does not have power to cancel the voluntary registration. The voluntary registration is taken under section 25 subsection 3. If a person has taken voluntary registration, so there was earlier no option with the officer to cancel it. See the drafting of clause C, subsection 1C, the taxable person other than person registered under subsection 325 is no longer liable to be registered under 2227. This is struck down and a new section is inserted where now if a request is made to a proper officer for voluntary registration case, now the proper officer have the power that he can cancel registration obtained under section 25 subsection 3. So this was a power which was missing in the legislation, which is now created for those people who have taken voluntary registration and those people who believe that they don't need any registration now, they can go to the officer under section 29 and they can request to cancel their registration. And now the officers are very much authorized under by the way of point number C that they can cancel this voluntary registration now. Now, there's another amendment in section 30, which is made effective from the 1st Jan, which is very important. See, in the new tax regime where every communication is going by electronic mail or by SMS made, sometimes it happens that the tax officers throw notices of show cause in the electronic mail, and even an SMS notification is come, which is not seen by the taxpayers, and it happens that registration gets cancelled. Even the order is served in the email, and the people are not aware. There was only a time of 30 days to apply to the officer for revocation of the same. And if this 30 days time is left, you have no other option to go for an appeal against this order. But now, and going appeal is not easy for all the cases. Considering this request, this section is amendment and a proviso is added, which shows that if there is a sufficient cause and for a reason to be recorded, the additional commissioner and the JC may allow 30 days extra time to apply for the revocation of the registration. And if there is a strong case, then you can go to commissioner also. He can allow you additional 30 days time beyond the clause 1. That is 30 plus 30 now can be so you will have extra 60 days time to go to the commissioner or additional commissioner or joint commissioner. You can buy some additional time if you will show that there are sufficient cause that you are prevented to apply for a revocation of cancellation. You can go to additional commissioner and joint commissioner. You can state a good reason. They will give you an extra 30 days time, allow you the extra 30 days time, and you can also ask commissioner also for further 30 days extension of time if there is any strong reason behind it. So this is again one very important demand which was required because 30 days time, the people, especially the MSME and small sectors, were not very much aware to check the mail regularly, and it gets unnoticed and their registration is cancelled, order is served, and after they realize suddenly that our registration is cancelled, so they have no options left to go for appeal. Now at least for a reason they can apply to additional commissioner and joint commissioner. Even after the expiry of 30 days, they can allow the additional 30 days time. And if this 30 days is also lapsed, they can go to the commissioner. Then commissioner can allow you the time period of further 30 days beyond the time period of A. So 30 plus 30, that is 60 days additional time is now available for the applying for the revocation of registration. Now section 31, that is of issue of tax invoice. uh, issue of tax invoice, we are aware that 31 is a issue of tax invoice in which a proviso was earlier also present. What this proviso says is that the government may, on the recommendation of council, may notify a category that who will not be required to issue the invoice. And in this, they have notified cinema halls that they don't need to issue the invoice for the tickets. The ticket they issue is very much compliance of the invoice. But there were some few things which were missing in that proviso, which they have now added to the proviso. Earlier there was coverage of only service. Now they have added the word supply to this. Now with this, now by this amendment, if they want to notify for any of the goods, they can very well cover under this subsection 2 proviso. And earlier there were no time limit defined, that at what time this invoice or this special category of person, deemed category, will issue that thing. Other than instead of invoice, what they can issue, they have specified, but time limit was not there. Now they have given a proper power to themselves. They have empowered themselves that they can specify the time also, and they can very well cover the supplies of goods also. By this, they have now power to specify for the supply of goods as well, that instead of invoice, they can very much say that challans can work, or they can very much say that other document can work, and they can specify the different timeline instead of time of supply which we see, right? So this amendment is done in section 31, issue of tax invoice, subsection 2 provision. This empowers the government to make different rules for tax invoice for certain categories of supply. The earlier provision does not have the goods and time limit. Now it is very much covered. Coming to the next important amendment was TDS certificate. That this TDS is GST TDS certificate, and when the GST TDS provisions were implemented, because the issue of TDS certificate were very harsh provisions mentioned in the act itself. It says that if a TDS is deducted, then there is a compulsory need of issuing TDS certificate within 5 days. And if the TDS certificate is not issued within 5 days, 100 rupees penalty per day will be applicable. So, but effectively, it will be 200 rupees per day for delay of issuing certificate. But the facility of issuing certificate was not activated by the GSTN portal for so long. Fearing the non-compliance, some of the government departments have started, at that time I can recall, have started preparing manually itself the certificate, and they were circulating. But manual preparation of certificate was not feasible. They have indicated through the press release or the intention that they will not take any penal action for this clause. But since this was in the law itself, they cannot change it by way. The only way they can be changed by the amendment to the act. So now they have made it very smoothly. They have drafted in a loose way so that they can prepare rules if they want at any point of time. They have amended. They have struck down the point number 3, struck down the point number 4, which says that you compulsorily need to issue a TDS certificate and within 5 days, and there will be late fee. Instead, they have only mentioned that a tax deducted certificate need to be issued in such form and in such manner in which will be prescribed. So they can very well cover up this point, time limit and late fee later on in the rules. Till date, it is not notified yet. The provision is enabled now. Now coming to very important amendment which was done in Finance Act 20, which is now notified from 1st of January 2021. There is section 122 which deals with the penalty for non-compliance, and in that section subsection 1A was inserted. Let me give you a brief background why these provisions are inserted. In GST, the action can be taken for those persons who are either suppliers or receivers, who may be registered or not registered. But what will happen for those persons who are neither a supplier or nor a receiver? for them there was no provision by which they can be covered up, or those people who are violating this provision, especially you can say those people who are doing this bill trading, fake billing, and who are masterminding this thing, they were not covered from anywhere. So to make them covered in this GST provision, a special provision, subsection 1A, is inserted, in which those people who are anyway connected with this type of transaction, and who are benefited by this type of transaction, will now get covered for covering them until the penalty provision. And we will see after this subsection section, the prosecution, and they have also inserted a similar provision in the prosecution, so that they can be prosecuted. What this subsection says there says, let's read: any person who retains the benefit of a transaction covered under clause 1 to 7 and 8 of subsection 1, at whose instance such transaction is conducted, shall be liable to penalty of an amount equivalent to tax evaded or input tax credit availed for or passed on. This is newly inserted section. The fake billing issues are very much growing. We can very much see the daily press release, or what the data is coming to us, and we are seeing that there are some rackets operating for this. There are middlemen who enable this facility to cover those people for the penalty provision. This section is very much inserted. So the very important and interesting point is all the persons are not covered. Only those persons are covered who retain the benefit of a transaction, who at any point of time gets benefited of the transaction, and at whose instance such transactions is conducted. I have seen some of the DGCI rates and DGCI cases. They say that those people who are mastermind, जिनके कहने पे पूरे transactions होते हैं, जो mastermind करते हैं, those people will get covered by this transaction. They were earlier also making the cases, but there was no provision for them to give a penalty notice them. Now it is inserted very well. They can start proceeding against those person who retains the benefit, and at whose instance such transactions are done, they shall be liable to penalty of amount equivalent to tax evaded, input tax credit. These 4 transactions they are speaking. These 4 transactions are: supply of any goods without issue of invoice, issue any invoice or bill without supply of goods, takes or utilize input tax credit without actual receipt of goods, that is just passing on the input tax credit without actual transactions of goods and services, take or distribute input tax credit in contravention of section 20 or other rules. So these are all serious offense which are relating to fake billing or issuing of invoice other than without supply of goods and services. So now those mastermind people who are acting as an intermediary or who facilitates these types of transactions are very well covered under section 132. But this provision has to be seen very carefully, that only those person who retains the benefit and at whose instance the transaction is conducted will be covered. Any person who was not aware of the transaction and who is not benefited out of those transactions cannot be made liable under this section, right? So after this, let's come to section 132, which is of punishment of certain offense. In this also there is some amendment is done to cover those people, again the same which we have discussed in the previous provision. If you see the amendment part, earlier it was only whoever commits was there. Now, or causes to commit and retain the benefit arising out of any of the following offense is added. So that means if a person causes to commit, act as a middleman, supports any of the men, or he's a transporter, he supplies the goods without the bill, then also he can be covered up here. Who is an intermediary, who is a broker, can be covered here, and he retains the benefit arising of that offense, then that person can be prosecuted. The punishment proceedings can be initiated against that person against section 132 of 1. Now there is another amendment in section 132. Point number C and E is amended. What will be their impact? I'll tell you. If you see carefully, the avail input tax credit using invoice bill is struck down from here, and in point number E, fraudulently avails input tax credit is removed. This section is newly inserted, where it says avails input tax credit using the invoice or bill, or fraudulently avails input tax credit without any invoice or bill. This fraudulently avail input tax credit was earlier in point number E, which is now added to point number C. And if you ask me what is the impact of removing it from E and covering up in the point number C, is point number C is an cognizable offense and non-bailable offense. Earlier, it was covered in non-cognizable and bailable offense. Now, the practice of fraudulently availing of input tax credit without invoice or bill, or availing input tax credit using invoice or bill fraudulently, is now made a cognizable offense and non-bailable offense. Let me just remind you that cognizable offense are those offense for which there is no need of warrant. The proper officer can take cognizance of that transaction without any warrant, or can take action on this person. And those who commit this offense, this will be non-bailable offense, and the person need to reach to the court for getting this bail for this kind of offense. The most interesting and important point is this provision of section 132 is made effective from 1st of January 2021. While I was seeing some of the cases of bail, of this fake bail cases, I have seen some orders, and I have seen some proceedings in which the lawyers majorly argue that section 132(1) or the amendment done in point number C and E were still not notified. So that means that this offense was bailable offense earlier to this 1st January, because it gets notified recently only. And the lawyers who were fighting for the bail petition of those person were quoting this only, that though the amendment is done in the Finance Act, but this was not notified. So now this is notified. I think the court will take note of this, and this plea will again not work for them while taking the plea, while pleading for the bail. So now this is now notified, and now it has become a cognizable offense and non-bailable offense. So now the bail has to be taken from the court itself. And the provision of prosecution is extended to cover for all the person, for those person who causes to commit, by those person who support this offense in any possible way, and that person retains the benefit arising of that offense. They can be very much punished for this offense under section 132 now, after this amendment is done. Then there is a rectification type of amendment is done in schedule 2. Let me tell you that schedule 2 is that schedule which tells us that what the particular type of supply is, goods or service. In that, there is a paragraph number 4 which says that if there is a transfer of business asset, then this will be treated as supply of goods, and this will be treated as supply of service. But there was one important line they mentioned in point number A and point number B, which is whether or not for a consideration. This whether or not for a consideration is struck down in both the para A and para B. Very important reason is section 7, which talks about the supply. We very well know that for a thing to be a supply, there is very important need for a consideration. And there is only one exception to this rule, is schedule 1. If there is no consideration, then we have to go to schedule 1 only, and only the schedule 1 transactions can be covered without consideration in the definition of supply itself. So without consideration, there is no supply. Only ways there has to be in schedule 1. So how you can come down to schedule 2? Because for schedule 2, it is very important. First, it has to be a supply. Then only the classification need to be checked. It is a goods or service. If it is not a supply, That means there is no consideration, it is not a supply, so you cannot go to schedule 2. So it is just a rectification which is done. It was not possible transaction, whether or not for a consideration, it has to be in the form of consideration itself, then only you can arrive at 4A or 4B. So this rectification is done by way of this amendment, and this amendment is retrospectively applicable from 1st July. I told you because it is in the nature of rectification itself. So this is a retrospective amendment done from effect from 1st of July 2017. After this, budget changes which are made effective from 1st January. Let me bring to you the recent notifications which were made effective and which were effective from 1st of January. We all are aware that for e-invoices are made applicable for all those SACs whose aggregate turnover exceeds 100 crore. E-invoices are made applicable to the registered person other than SEZ, insurance company, banking, financial institution, NBFC, GTA, passenger transportation services, supply of service by way of cinema halls, multiplex. Any person whose aggregate turnover exceeds 100 crore rupees after 17-18, they have to compulsorily opt for e-invoice. The interesting part is, friends, that the revenue department has given indication that there may be a possibility from 1st of April 2021, all the B2B transaction can be covered under the e-invoice, or there can be another phased way implementation. Now, from earlier, the very initial step was 500 crore. Now it has been brought down to 100 crore. Maybe from 1st of April, it can be brought for the SACs whose turnover is more than 5 crore. So we all have to be very much geared up for all our small and medium sized enterprise whose turnovers are exceeding 5 crore but less than 100 crore for the way of implementation of e-invoice. After this e-invoice, there's another change, another amendment made to Rule 36(4), which says that now the restriction has gone down to 5%. If you can recall how this uh, is going on, that this Rule 36(4), which says that the credit can be only available up to a specified percentage that is being reflected in GST or 2B or 2A. When this rule was introduced, Rule 36(4), on 9th of October 2019, 20% additional credit can be availed. What is being reflected in 2A or 2B. On 1st of 1st 2020, we got a new year gift, and this limit of 20% is reduced to 10%. And in this new year, this 10% is further reduced down to 5%. So that means we can avail ITC only to the extent of 105% of the invoice that is being furnished in GSTR1 or invoice furnishing facility. If there is any invoice missing in GSTR 2B or 2A, the only extra you can avail is of 5%. That is 5% of the amount which is being reflected in the GSTR 2B or 2A. That's only you can avail by way of Rule 36(4). So the limit is further reduced from 10% to 5%. And this relevant information can be fetched from GSTR 2B. From 1st of 1st 2021, this 2B is also effective. Let me tell you that this 2B is generated automatically on 13th of midnight, and we can very much see the invoices which have came in the GSTR 2B, and based on that, we can take credit of 105% of what is being reflected in GSTR 2B. Eventually, we are seeing that department is moving from this margin of 2010 to 5. And there can be a situation, I feel, that from 1st of April, there may be a guideline may come that they will say that only you will get the credit which is being reflected in GSTR 2B from 1st of April 2021. There may be possibility. So eventually they are moving on actual system of what is being reflected. We'll give credit only up to that. Now there is another interesting rule. Rule 86B is made effective from 1st of January 2021. Rule 86B is on restriction of use of available electronic credit ledger. Not going into the legal validity of this rule, constitutional validity of this rule. This rule says that notwithstanding anything contained in this rule, if a registered person, the registered person cannot use electronic credit ledger. That means ITC available with him in the credit ledger, but he cannot use he can use only up to 99%. He cannot use in excess of 99% of electronic credit ledger to discharge his liability. So he has to compulsorily pay 1% by cash ledger. And he says that in case if the taxable value, this is applicable for those people who, in case if the taxable value other than exempt and zero rated supply exceeds 50 lakh rupees. It says if your taxable supply, please note this word very carefully. This is applicable only in case where taxable supplies exceed 50 lakh rupees. So if your exempt turnover exceeds 50 lakh, your zero rated supply 50 lakh, this rule is not applicable. This rule is applicable only when your taxable supplies exceed 50 lakh rupees. Then these restrictions will apply. You can only use 99% of 99% of electronic credit ledger. 1% you need to pay from the cash. But there are certain conditions, certain relaxation for this rule 86B, and it says that rule 86B will not be applicable for those person. Number one, if that person, let's say a proprietorship firm, if that person, or if it is a partnership firm, then the two partners, and if it is a company, then directors, and if the company itself have paid more than 1 lakh of rupees as an income tax in the last of 2 financial years, then this provision of rule 86B is not applicable. Basically, if you will see with all these exceptions, they are trying to evaluate that if you are a person of sound reputed and you have contributed, your credibility is evaluated by anyway. By if you have paid income tax of 1 lakh rupees in the past 2 years, then you are a good person. We know, we trust you, and you can pay. From whole of credit. You can pay the tax wholly from credit ledger. There is no restriction of using credit. Next is if you have received refund of GST more than 1 lakh in the preceding financial year on account of unutilized input tax credit, that is in case of export, that is zero rated supply, or you have received refund of inverted duty case, inverted duty structure. That means your outward supply rate is lower than your inward supplies. In that case also, this restriction of 86B will not apply to you. Third, it says that if you have discharged liability, discharge outward tax liability from electronic cash ledger, which in the cumulative form is more than 1% of the total tax liability of the said month, then there is no restriction of rule 86B. Let's say, for an example, that in the past you have sufficiently discharged your liability through cash, and up to the month, let's say you are filing for the January month, and up to the January month, you have paid the liability more than 1% from the cash. If we see cumulative, then also this restriction will not apply, right? Further, this restriction will again not be applicable for the government department, public sector undertaking, local authority, statutory body. There is again a power given to the commissioner or an officer who authorized by him, who will notify such category of person to whom this rule 86B will not apply. Coming to the new time limits for GSTR1, for the quarterly filers of GST, the time limit is now carefully revised to 13th day of the month succeeding such tax period. Earlier, let me remind you that earlier it was end of the month, that is on 30th you need to file 30th of the time. Now for quarterly filers also 13th day is fixed. For an example, if January 21 to March 21 return is filed, then the due date will be 13th of April, not 30th of April. So the due dates are revised from 30th to 13 now for quarterly also. And for monthly GSTR1 filers, it will remain same, that is on the 11th day of the month succeeding the tax period. For January, it will be 11th Feb. For Feb, it is 11th March, and for March, it is 11th. These dates have been notified by notification number 83 recently. Validity of e-way bill is revised. This is again very important to inform to our clients that e-way bill validity has been revised. Earlier, under Rule 138, Sub-Rule 10, 1 day period is allowed for 100 kilometers. Now, for up to 200 kilometers, 1 day time is given. This 1 day time is this time period we are speaking about other than over-dimensional cargo. The original timing was, the original provisions were up to, if your distance to be covered was earlier 100 kilometers, then 1 day period was allowed. Now this 100 kilometer is revised to 200 kilometers. That means if your distance is up to 200 kilometers, then only 1 day will be allowed. And now for every 200 kilometers or part thereof, only one additional day was allowed. Earlier it was for every 100 days or part thereof. Now let's understand this amendment effect by way of this example, that if a truck has to reach a destination from point A to point B, which is having 560 kilometers away, the validity of e-way bill was, earlier it was 6 days, 560 days. So 500 kilometers, 5 days, and part thereof another additional day. So it was 6 days earlier. Now after this amendment to Rule 138.10, it is revised to now 3 days. So just half, the validity is revised to half. It is very important. We all know the consequences of expiry of e-way bill, a validity of e-way bill. E-way bill is not considered valid if it is expired, and we all know the consequences of section 129 and 130 once our vehicle is caught with expired e-way bill. Though there are very favorable judgments of some of the courts and some of the ruling, but that again have to be litigated. Then there is another change in Rule 9, which is relating to registration, which says that earlier the verification and approval, earlier the grant of registration was within 3 days. Now after the amendment, it is amended for 7 days. And again, it says that if a physical verification is required, that is on non-Aadhaar, if the Aadhaar authentication process is not done, or if the department feels that a physical verification is needed with the prior approval of Assistant Commissioner, then again this 7 days time will be revised to 30 days. The 7 days process will be revised to 30 days. But this verification, physical verification case are only two. One, where Aadhaar authentication is not done, or if the department feels fit case to do a physical verification, and this department fit fail case is only with the prior approval of the additional commissioner, then the time limit of 7 days will extended to 30 days. This 30 days time will again start after the physical verification is done. If the physical verification is not done, 30 days period will not start. 30 days period will start or commence only once physical verification of the place is done. There is specific mention in the rules itself. The physical verification of the place of business will be conducted in the presence of the said person and in the manner provided in the Rule 25. Verification of such documents by the proper officer. So you need that proper person has to be present there, and the document need to be verified by the proper person. Once the verification is done, then the time limit of 30 days will start. Next change is the cancellation power. The cancellation power has been extended of GST officer for these 3 cases, where it says that if for the comparison of GSTR 3B and GSTR 1 shows that there are significant different or there is significant anomalies. Let's say there are that in GSTR 1 the liabilities are much higher as compared to the GSTR 3B, or input tax credit. In the next point, it says the comparison of GSTR 3B and the inward supplies, that is GSTR 2A and 2B. There are significant difference, or there are huge amount of anomalies. Or third case is if their analysis of if their analytics shows that there is some problem with this person, then your registration will be suspended, and an intimation will be given to you in form GSTR RG 31 by email to explain you within 30 days that why your registration shall not be cancelled. So in total, if we see, this rule is the cancellation power has now been very much extended for those cases where there are a huge difference between 3B and 1 in the outward tax, in the ITC, or there are some suspicious transactions, some data analytics shows that you have contravened some of the provision, then again the department can suspend your registration, issues you RG1 to explain you within 30 days that why your registration should not be cancelled. The last point for today's is the recent restriction they have done is that you will not be able to furnish GSTR1 if you have not furnished GSTR3B for the preceding month. Earlier, we were very much aware that if 3B is not filed, the people were happily filing GSTR1. The people have filed GSTR1, and the same is reflected in the receiver GSTR2A, and that person was enjoying credit very much. Even though the tax was not paid, the compliance of Section 16 conditions were not done, eventually resulting in the default in the credit of the receiver. Now, at least there will be a control on this, that if GSTR 3B of past 2 months are not filed, that person cannot file GSTR 1. In the quarterly scheme, they have said that if GSTR 3B of a quarter is not furnished, then GSTR 1 or invoice furnishing facility will be disabled. They will not be able to furnish GSTR 1 or invoice furnishing facility if GSTR 3B of preceding quarter is not furnished. The last one is if a person is covered under Rule 86B that we have recently seen, that means those person who are having taxable supply of 50 lakh, those people, if they have not filed GSTR 3B of only a 1 month, so if they have not filed 1 month GSTR 3B for the same month, they will not be allowed to file GSTR 1, or they will not be allowed to file invoice furnishing facility. For them, the restriction is only for 1 month or 1 quarter. So with this, I finished my deliberation on our today's topic. I would be happy to take the question of all of you with the permission of the host, if there is anything we can cover up. If there is any question relating to the presentation, we can.
Yeah, there's a question whether option for payment in M1 and M2 of any quarter can be different.
Yes. See, this facility, there is no specific direction given by the department. You can very well opt for 1 month one option, for another month another option. There is no specific direction given by till now. There is no clarification issued by the department. I hope there will be some clarification very soon on this. But till now, it is seen that you can very well opt for any of the option for 1 month, and another you can switch another option for the second month, right?
Okay, thank you. Yeah, any other questions, members can put it on the chat or turn on the video and ask, unmute yourself and ask.
I hope I have not gone very speedily.
No, it was good speed and good coverage. Fine. Any more questions, members, or shall we conclude the session? Okay, there's.
I got a question. I seen the question from C. Abhishek that if 35% is 10,000 and I have the ITC of 10,000, then whether required to pay? Answer is no. You are not required to pay. If you can recall my slide, I have mentioned there is a condition written that if you have sufficient balance in the cash ledger or in the credit ledger, then you are not required to pay at all, right? And if you are having nil liability, then you are not required in the special.
We'll just wait for one more minute, and if there are
No
questions, we'll
problem.
load it.
We have sufficient time, I think.
Yeah. Okay, so I believe your presentation has covered almost all the doubts, like, and yeah, it was a very nice coverage in terms like widely covered different topics, yeah, and refreshed whatever like was notified later, you know. So, and of course, QRMP very nicely covered. And before we ask Tasneem and Dalal to take the vote of thanks, I would just make an announcement of the next meeting. So that's on budget. So budget is coming on 1st, and so on the 3rd Feb, Wednesday, in evening 5 p.m. to 7 p.m. we have CA Bhupendra Shah who will be talking about the budget analysis. So I have posted the registration link on the chat. So those who want to register can click on the link and register for that. So see you all in the next meeting. And for this fantastic meeting, request, yeah, thanks all members, and I request Tasneem to give a well-deserved vote of thanks to CA Ramandeep Singh.
Before any vote of thanks, let me say a few words. I sincerely thank all the participants who were available here, and sincerely thank the CP chapter for giving me this opportunity. Thank you, dear friend Murtuza, who who has been one of the introducer to me to you all. Thank you, everyone, and over to you.
Thank you, Bhatia Sahab. Thank you for giving us your valuable time and giving such a lucid presentation on the intricacies of the quarterly return monthly payment scheme. Because frankly speaking, all of us were so busy with the tax audits and all that, so we had not gone down to the intricacies. So you have completed that, and we are very grateful to you, and especially all the new amendments also. And thank you on behalf of the Vaikata CP Study Circle, the convener, co-convener, and all the members. Thank you so much. And we hope to have another meeting with you for whatever topic which you would like to take up.
Sure.
Thank you.
Definitely.
Thank you. Thank you.
Thank you all.
Thank you.
Thank you all. Thank you.